In today's video, we take a look at the stock, crypto, and commodities markets with a deep dive into each to try to find out what's happening next together. We know there's been a big bull run with a huge ripper rally. The question is it a bull trap? We're about to find out because one of the key indicators, the 20 exponential moving average, which has been respected for well over a year, is about to be tested. So sit back, relax, and let's get started talking about where this market's off to next. See you soon. So welcome back to our market recap for the market's close 31st of January 2022. And like clockwork, the articles have started changing in the mass media. It's now bears beware. Past corrections for the S&P 500 are only 15% on average outside of recessions. And while this is very true, remember the S&P 500 fell around 12%. And while the Nasdaq fell a lot more than that, it may not be all over yet. But let's look at some of the things that may be causing this market to go up so much. And one of them is the classic case of fear. Remember, there's fear and there's greed. That's really the two types of things that we look for in markets. And this is an absolute case scenario of taking advantage of retail traders. So traders under 10 contracts in terms of puts, we'll notice here nearly 12 million put options were bought into the 2022 period, and it's just phenomenal amounts of puts that were stacked into this market. What makes things worse is that small trader premiums were actually above the period of March 2020. So when we were going through the pandemic and the crisis that happened there, we have seen and eclipsed that level in billions of premiums into puts. Now, one thing Wall Street hates doing is they hate paying off these puts. So if you want to find out more things about how we go into options and think about it a little bit differently to others, remember to subscribe to the channel because we do cover this quite a lot. But the big key, if they hate paying off puts, then maybe they might rally the markets. What else do we know about retail traders? We tend to write puts or basically open options contracts for 1 to 2 weeks. And we've discussed this idea that we might be in for a bit of a wavy market where the market goes up, down, and all around for some time, purely because the market wants to extract maximum value from traders, from investors, and of course, get rid of some of the weak hands from the investment side. There's a lot of bear case scenario and bull case scenarios out there. Let's look at the surface though of the rally for the session. And it was a rally across the board, especially a great rally for the growth stocks. Nvidia 7.21%. Semiconductors were certainly something we were looking at on the day. We covered that on the weekend video, our favorite sector. It wasn't quite the best performer, as you'll see soon, but it was second best. And then we had the best day trader at the moment, Tesla, 10.68%. I tell you what, Tesla is fast becoming one of the best day trading stocks in the market. And I think everybody's on that train, especially when this sentiment is so high and low both ways. 10% switches, it's hard to beat that as a day trader. Let's move over to the markets. The great thing for the markets was, of course, the buying into the close. This is multiple days in a row now that we've seen Wall Street purchase the close. They purchased the open, let it run, and then dipped slightly into a rally for them to pick up the indices. And they got the Nasdaq to 3.29%, and IWM, the small caps, also came back with 3.07. So it showed a bit of a broad-based rally in this case. Now, as we mentioned, no, semiconductors were not the best sector to be in, 5.24%, very good. Another one that we've liked recently, Jets coming back, 3.92%, good to see it coming back. And then TAN here, the solar index, 8.21% on the day, a beaten down, almost thrashed index sector, and it's come back 8.21%. So you know that growth was big and growth was being picked up across the board. Cathy Wood's funds, etc., did quite well on the day. But it wasn't for the ultra conservative. So all of these sectors like XLP, consumer staples, utilities, those types of things, they didn't do as well, and that shows that it was really the move to growth as well. Let's move over to some of the key points that the market will be looking at to sustain the run for this week, because we're not convinced yet with such a huge rally that this isn't potentially a bull trap. And I think that's one of the things that we all talk about here as a community, the bull trap. Is there a real case to be made for that. And I think a lot of you will say in the comments there is. So give us your case, or give us an idea. Do you think this is a bull trap, or is this more likely to be a continuous run in the markets? Let us know. Tuesday begins the key bits of earnings. And I think this is important. We had a rally Monday, fair enough, but we didn't have that much information coming out. Now we go back into earnings. And right now the beat rate's sitting at around 71%. So a very good beat rate. Remember, we want beats to be at least 60 plus to really solidify this idea that the market is partially fairly priced, at least on current expectations. And for any stock that you're looking at, be it AMD, PayPal, Google, Amazon, whatever it might be, the guidance is the most important stat. Not so much what it did, it's what do they believe it's going to do. So AMD's after the close, PayPal and Google, of course, Starbucks also there, GM, etc. That will be a big test Tuesday after the close. Join us for the live stream there. And then we have Meta, Qualcomm, Spotify, Amazon after the close, Ford, Snap, Pinterest. So many large companies coming out this week, really bringing down some of the big FANG stocks to completion. And this will be what the market's eyes are on. If they don't do what the market wants, we could be going into a big sideways market. Now, we've argued here for a while that this is probably a bit of a sell the rumor, buy the fact into interest rate changes. It's just based on stats, really. If you're going to raise interest rates, it's argued that about 1% drop of interest rates, or 1% gain in this case of interest rates, will drop the market around 10%. So let's call it 1% gain is around 10% drop off in value. That seems to be what happened here. So that's kind of what the expectation is currently. We know that we believe it's a bit of a sell the rumor, buy the fact, and the stats hold up for the next year. Midterm election years also tend to be very volatile. They will continue to be volatile for 2022. We do believe it's a trader's year with investors being able to pick up great levels, but the stats for the next year are very compelling. Green across the board, and not just a little bit. It's a lot if you get the right levels. Volatility, of course, seasonality here dictates January, February, March is a volatile time in the markets, like we've been saying, and technology tends to be up, down, and all around into that Feb-March period. But if we're looking at a sideways market coming into April and May, well, you better stick around, because it could be some seriously great gains if we get the right seasonality. So let's look at the technical analysis and bring the markets all together to get a bit of an understanding of the actual movements right now. The VIX, the volatility index, continues to drop. It's basically right now a shooting star or a rejection candle. This was one of the first steps to show us base, basically get rid of the fear in the market, create that initial spike. It drops off. That's really showing us more of a base formation. And we together brought that together with our options. Follow us on Twitter if you want to find out more information about the options stuff. And we found that base last week, 420 to 430. There was just so many puts sitting there. And I would probably think that most of those were retail trader puts, like we saw in that first couple of charts. So VIX definitely dropping, a good sign for the bulls. What isn't a good sign for the bulls is this continuation of strength here in the US 2-year. 1.187. So we've argued for a while that we still could see volatility in the markets until this starts to drop. Basically, the Fed's kind of like here, the market's getting ahead of itself. We need them to meet harmoniously in the middle a little bit to just stop this kind of continuation of the bull run here. And the same thing goes for the 10-year. The 10-year is still sitting around 1.8. We want this to settle down, and that, of course, can help the market also to have a bit better recovery. Let's go over to the DXY. The US dollar initially went through very large bull gains after the Fed came out and said that they may even consider a fourth and possibly even more in the future interest rate hikes. And we have here the resistance that was breached and now is acting as support. So a big 24 hours here. Day traders will be all over this level looking for signs of turnarounds to the bull side for the dollar index. And I don't blame them, certainly an area. Because the DXY dropped, gold recovered. I think that's really the main case here. Gold is still very sick. It continuously gets pummeled during these Fed announcements. It's not really doing the right thing. Some people might look at this from an inverse head and shoulders standpoint on the 2-hour. You can see the 1800 is acting as a key resistance here. I think we'll continue to watch that, but day traders will be liking some of the formation they're seeing, looking for that breakout, to get that continuous run that they're looking for. So gold traders, there could be day trades here if you know what you're looking at. Similar goes for silver. US oil though, it's almost unstoppable oil. It just keeps going up and up and up. And it's very similar to a lot of the other commodities and of course things like iron ore and other stuff. We're starting to see really big turnarounds here and big movements up. So oil is well on its way to the 92. It's hard to really stop it here. You go in, you look at the daily. I mean, it's looking pretty strong. We've got those rejections, long leg doji, the high, the low, the open, the close. We know these are indecision candles. You would think if we get the decision made above, we move towards the 92 level, which is previous support from years ago. So yeah, it just continuously shows the strength of this particular commodity. And whenever you look at it from a 4-hour standpoint, it seems to like holding the 4-hour 20s and the 4-hour 50s. So if you're an oil trader, something to be watching for that uptrend. Let's move over to the big one though, which was Tesla. And this was a huge move. And we did argue on the weekend video that this was very, very possible. And it was probably our favorite day trade. And the reason why is because we had the trough, we had the peak, we had the higher trough, and then of course we had the breach through that zone. Previous supports, our previous trend line, it snapped it straight off in the morning, small sell-off, boom, goes the dynamite. 10% up here for Tesla on the session. It is going to be hard to see that continue on too much just based on there are some problems ahead for it. Let's go to the daily just to analyze this a little bit more. We have the daily 20 moving average. We know a little bit of respect for that zone. And we also have the daily downtrend at this stage. So just through those last kind of peaks, there are going to be some fights between the bulls and the bears around 960. If we breach that level and of course get back above something like 1,000, that's going to be a very bullish case for Tesla. It had decent earnings. The market was maybe a bit unfair on it in some ways, but this is how it is. Manipulation is fierce. We know that retail was incredibly bullish into the earnings of this stock. If you looked at the options, you would see it. There was so much value to be taken by pushing the market lower. And it's just another case of manipulation from the street against retail. And while 2021 might have been the year that everyone thought they were beating Wall Street with AMC and GME, Wall Street's getting it back on everybody now with some serious manipulation plays. Like 960, again, a key level. 1,000 is a big one. Any gains here, though, I think we're going to be needing to look at the index, and that is the S&P 500 and Nasdaq, to get better clarity on whether it could turn around. So stay tuned. We'll be looking at that very, very soon. Let's move over to Apple. Apple's still in a trade range. It's tough here. I mean, we always cover Apple, but it's going up. It was up 2.61. I think on the weekend we talked about it as a community. My feelings and a lot of feelings out there were better stocks to be picking up in terms of just gains for the day. It did 2.61%. It's a great return, but the others did more. And I think that continues to be the big thing here. Look for Apple at 181. There is resistance there. It's a bit of an overpriced stock from some fundamentals as well. So it's a tough one. We might need to take it out of the loop and bring it back when it gets some better TA. Semiconductors, this was the sector of choice. It came off a beautiful trend line, obviously holding above 261 into the end of the close of the week. And it rallied straight into our resistance here, which we had set at 275. So if we go down to a 2-hour, we can see why this is a key zone. The market loves closing at these key areas. There's the resistance, day trade, boom. Fantastic level. And now we look for a breach of that and then a move to 290. So a breach of this area in the 50 exponential on the 2-hour, most likely 290 is the next stop. And then of course we see the supports becoming resistance. Semiconductors, great day, big move, resistance hit at the end. And we see the key levels moving forward. IWM, still tough to read this chart. This is the Russell 2000, the smaller caps. They recovered well. We are at a resistance. Again, another thing where we've got problems. We've got this 50 exponential moving average, which has been a little bit respected here in the past. And we have a bit of a max pain kind of when it dropped off a little bit lower. And we have the resistance that if we breach is a good sign towards that 210. Not much going on here for IWM, but great improvement in the stock index. And it shows that this is a broad-based buy up because they are buying the small caps, not just the big caps in fair strength. Now, here's where things get interesting, guys. This is where we get to a level that we're looking at and we're going, is there something more here? So there's two big levels that we need to be looking at on the Nasdaq. There's of course the level of the 20 exponential moving average daily, a massive mean reversion, and a 200 simple moving average, the green line here. Now they're both sitting at 15,000. So that's a psychological number. So if we were looking at points where the bears are going to start to try to fight back and say, bull trap, haha, we've got you, you would think it's going to come in somewhere around this area. And this is why you want to draw up like box areas for some of your stuff. So there's a box, and then we're going to put another box around up here where we've got that next level or key zone. So the bull case is, of course, here, potential resistance sell-off, that's the 15,000, or if it continues up and it gets above, the next case around 15,600. And if the bears fail there, well, guess what? They've lost onto new all-time highs, you would have to think at that point. And I don't think that we're going to see a rally similar to last time without having pullbacks. We did do a study of everybody in the community. Most people thought something like this would occur, where it comes back down. Possibly some people thought new lows. A lot of people thought more of a sideways action, and then we get that kind of new peak and continuation. So 15, 15.6 key levels to look at. If we go down to the smaller time frames like the 2 hour, you'll see why the session was such a cracker, such a great thing to trade, such a fantastic zone, because this area here was great consolidation. We moved above and you got a great rally. That's exactly what you want to see. Fantastic stuff. SPY, if we look at the S&P 500, we mentioned at the start of the video the 20 moving average. Let's just quickly look at the 20 moving average again on the weekly. Support, 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 support becomes resistance. So that's sitting at around the 455 area. So 455, we're at 450 at the moment on the close. It's not many points away, less than 1%. And that's where we expect the market to have some problems. So just remember, the S&P 500 is the best indicator. That would time up very well with the Nasdaq at around 15,000 as well. So if we do get rallies, expect some problems here. If we bust through and go higher, well, big deal, 460 becomes the next zone and so on and so forth. But these are big, huge moves coming off each day. 2%, 2.5%, 3% out of the Nasdaq. It's not normal. These like usually when you get pullbacks, they're slower, they're more methodical. When you get huge, big 3% days each way, a lot of the time that can be false. And it creates that FOMO and it gets us involved in the markets and makes us have poor decision-making skills. So daily 20, again, around that 450, lots of problems here, big supports and big resistances, plus the weekly 20. There's a lot to see from the bear side at around this zone, plus all the articles now suddenly going bullish instead of bearish. Let's take a look at the options. Does that really compete with the same idea? It kind of does. If we think about it, 420, we're quite far away from that, from the put expiration this week. So we've got that put wall sitting around 420. Certainly don't expect lower than that. But we do have some interesting buy calls sitting at around that 460 area. And if we see more striking coming off at around 455 to 450 and even the 460, anywhere in here, and this starts to grow, it could really put in case that idea of the bullish call wall for the week. So the market unable to get through that. Remember, we have big news still coming out. A lot of the market is going to be sensitive to this news, jobs numbers coming out on Friday, and some others we'll look at. Because if they don't meet certain expectations, or let's say they go over and show heaps of inflation, heaps of problems, it will instantly move the interest rates. It'll instantly move the market into fear mode, because it will be thinking, okay, we're going to see these rate hikes. We're going to see them at a faster pace. And that's what the market doesn't want at this stage. So 20 moving average on the weekly, one to watch. Let's move over to crypto. Still big problems here with Bitcoin and the crypto markets. They are rallying, they are moving up, though pretty sluggishly considering they were moving with the Nasdaq in synergy. They are still doing it, but it's just continuously weakening on this way up. It goes higher and higher and higher, but see these rallies? Each time we've had a rally, we seem to hit this trend line on the way down. We also hit this daily 20 moving average and have problems with it. Problem for Bitcoin is it's sitting right around there. So many people are arguing this looks like a flag pattern. So basically they're saying here's the flag, here's the pole. We believe it's on a next down. And it's very difficult to argue with that. This has not been strong rallies across the board. If we get through something like 40,000 and really snap this downward trend and the 20 moving average, well, then we've put in some good work. But the problem with crypto is there's a lot of fear in the markets. Obviously, a lot of people are freaking out, and it's more about, do we have a good technical reason to be in that? Not just yet. I mean, we haven't really had a great technical reason to be in it for some time. We've seen good bases, but we've never seen nice breach outs. Like here, we were going for 52,000 plus. Here, we were going for it to get back above 46. It just couldn't do it each time. Ethereum, on the other hand, looks a little bit better. If we move over to Ethereum, nice breach close on the daily. That consolidates the bottom here. And there's a good gap between there and 3,000. So if you're looking at the cryptos, possibly Ethereum shows one of the better technicals, and it's across all of the time frames. You look at the 2 hour, it did get above any other close. And it's also been making a series of higher lows, which we love to see in the markets. So yeah, it's across the board, this rally. It's looking good. But at the same time, we're about to approach the first real tests for it. So do you think it's a bull trap or a bear trap or what else? Let us know in the comments down below. And do remember, we've got some big information coming out for the US on Tuesday. We have US PMI. So that is coming out at 10 a.m. New York. And then we keep scrolling through here. We've got the ADP non-farm employment change first numbers. We've got OPEC meetings, big thing for oil here. And if we scroll down, we have ISM services PMI on the Thursday, and then the big numbers here on the Friday, the jobs numbers, of course, non-farm employment change. That's 8:30 a.m. New York time, a big number, sure to move the markets, especially things like dollar index, gold, and some of the indices as well. If you enjoyed today's video, please subscribe. Remember to smash that like button. And thank you so much for everyone supporting us recently. We do appreciate it with your comments and everything else. See you soon. Good luck today. Bye.